All righty. Well, we'll go ahead and get going and we'll continue to let people in the room. So good morning, everyone. I'm LaShawn Gordon. I get the pleasure of being the Director of Membership and Engagement at United Partners of Human Services. Also joining us is my colleague and our Executive Director, Amber Tynan. See her waving. But thank you all for joining us today. We are super excited to have with us Mr. Mark Payne, who is the managing partner of James Moore and Company. He is a CPA as well as one of our top-notch board members. We actually share an office with Mark, and he is hilarious. But he is going to talk to us this morning about being fiscally responsible and ultimately having long-term success in that area. This is something that Mark is very passionate about and he's very knowledgeable about. So it's a blessing to have him with us this morning. If you attended the training on grant management last week, as you know, because we're in the height of grant season, new contracts, that sort of thing, we thought it would be great to kind of have this series of trainings. We are recording. There is a PowerPoint presentation. Mark's not going to talk from that because we don't want you to get caught on what's on the screen. We really want you to get the meat and the content of the training, but we will make the PowerPoint available to you. So I will hush and turn it over to Mark so we can get to the good stuff.
Perfect. Thank you, everybody. Good morning. And we got a couple people who took a risk. Edith and Rhonda are actually showing their faces. Good job. Everybody else is either in their pajamas or just had a bad hair day. So what you see is what you get. There's like 5 of us, I guess. Is that what I'm seeing? 5 people now? Yes. You guys feel free to talk, by the way. So I'm Mark Payne with James Moore CPAs, also a board member. And I want to hit a few topics this morning, things that I feel like are kind of relevant in the environment that we're living in. And I think, LaShawn, did you send out the article that I had written back in April on COVID?
I did not, but I will.
No, that's okay. I was just wondering. I wanted to talk about COVID. I wanted to talk about PPP. I wanted to talk about what you guys should be doing as leaders in your organization. And I wanted to be talking about internal control issues. I want to be talking about fraud issues, tone at the top type things. And I'm a very informal speaker. I kind of jump from here to there with no particular reasons. But there you go. The first thing I wanted to talk about this morning was PPP. I can't see and don't know, but I'm sure a lot of your organizations have applied for the PPP money. As you know, once you get that PPP money, they've changed the rules on us. They seem to be changing the rules all the time. From my understanding, right now, if you filed and requested less than $50,000, there's actually a 2-page easy application that you can file with your bank. You basically are supporting that with pretty much payroll because they've changed the rules. Originally, if you'll recall, it was payroll, utilities, and rent were kind of the premise of the whole PPP forgiveness process. Well, for whatever reason, they decided to change that 8-week period to a 24-week period. So now, from the date you got funded, if you were to look at that point in time and move forward 24 weeks, that's kind of your forgiveness period. What we're seeing is most of our clients are actually meeting the qualification for forgiveness during that 24-week cycle with just payroll, right? Because originally when you applied for PPP, it was basically 2.5 months times a normal payroll cycle, if I recall correctly. So we're starting to have clients file for forgiveness. I actually have one client in Tallahassee. They probably got $800,000 as more from PPP. He emailed me this morning. He said, "Hey, we've gotten conditional approval for forgiveness from the SBA." I'm not sure what conditional approval means, but that's what he got. Just from a banking perspective, if you'll recall, once you actually file for forgiveness with your bank, so you got the money, the 24-week cycle has come and gone. I'm now sitting here wanting to file for the forgiveness of my PPP money. The bank actually has 60 days to turn that application around to the SBA, then the SBA has 90 days to basically say you got full forgiveness, no forgiveness, or partial forgiveness. If you get partial forgiveness or no forgiveness, if you'll recall, then that loan is basically going to have to be paid back over time, a 1% interest rate. And I want to say that time period is about 2 years. Hopefully, everybody on the phone is going to have forgiveness. One thing that there seems to be confusion about in the nonprofit world is this. Mark, all my funding comes from cost reimbursement type grants. I've also applied for the PPP funding. And I'm going, well, you get one or you get the other, but you don't get both. And that's catching some people by surprise because they've been filing their grant applications and charging most of their payroll to it. So if you've done that, you can't also use that payroll for PPP. Now, I have had clients that said, well, we're going to stop charging our grant for our payroll, and we're going to get this PPP money, and then we're going to get back with our grantor and try to renegotiate something. I have seen that done too. There's some confusion on the streets also if you're a nonprofit and you have a contract that's either a unit-based contract or a deliverable-based contract that is not necessarily tied to cost. So you got some kind of rate from the feds or the state to say, we're going to pay you X number of dollars per service, regardless of what your cost is. The problem there is going to be next year because I'm already having clients call me, and on these new round of fundings from the grantors, they're wanting to know how much PPP money did you receive? Although it didn't impact you last year, what I'm possibly seeing is, and just be aware of this, they're probably going to want to reduce your funding stream next year and reduce your per encounter rate to account for that PPP funding. So they're getting it now or getting it later, but the concept is the no double dipping concept, if you would. So just be thinking about that in the back of your minds. The other thing that's coming up with PPP, and if you're like me, you're probably tired of talking about PPP, right? I mean, even United Partners for Human Services got PPP. Amber, I'm assuming at this point in time you have filed for forgiveness. Good, good. I was going to say if you hadn't, just we can work with it and get it knocked out real quick. The other thing that I'm seeing right now is this whole reporting of the PPP money on a nonprofit's financial statement. So this is the new question that's coming up right now. You know, in the past, we have followed generally accepted accounting principles as far as recognition of revenue. The PPP money is basically outside of all spectrums. We're almost following the international accounting standards on this from a probability perspective. So most of you guys out there are probably considering, yeah, it's probable that we're going to have loan forgiveness. That being said, there's one or two methods of reporting this loan, if you would, on your book. So the question becomes, when do I recognize the PPP money in revenue? That seems to be the big question right now. We've actually been in contact with various firms around the United States. We're members of TAG International, the accounting group, or AGN, Accountants Global Network, which is the old TAG. We've also been in contact with the AICPA as far as what other CPA firms are doing. There's really two ways you can do it. The simplest way to do it right now would be to carry that PPP funding on your books and show it basically as a refundable advance. So you're going to carry the money on your books as a liability until you literally get forgiveness from the SBA, which is going to be next year, even if you're a December year end. We don't predict anyone's going to get forgiveness this year. If for some reason forgiveness is given next year before your financial statements are issued, if you're getting audited or reviewed, then we can basically have a subsequent note in the financial statements that subsequent to year end, the PPP money was forgiven. So that'll be the way that's presented. The other way, and we're encouraging clients not to do this primarily because of the unknown, because of the risk from an audit perspective, you could really take the approach that say, we got a $100,000 PPP loan, and Mark, we spent all of that money before our fiscal year end. We have not received forgiveness from the bank. We've not received forgiveness from SBA. Your auditing firm could come in, and they're probably going to charge you more money to do this, and literally take your loan application that you have filed with the bank and literally audit it almost like you're having a major program from a grant perspective. We would go in there and look at FTE counts, looking at payroll reductions, looking at all those things we feel like that SBA is going to do to make sure that there's actual forgiveness. And if we determine that the forgiveness has truly been done from a cost perspective, then basically reclassifying that refundable advance up into the revenue category to recognize that revenue in prior years. The other thing that's coming down, and a lot of discussions on this for you nonprofits out there that maybe have loans with banks, a lot of times we're seeing, loan compliance issues, debt coverage service ratio issues. So if you got the PPP money and you do have some debt requirements, you really need to be looking at what those requirements are, number one. Number two, figuring out if I keep this liability on the books from a debt coverage ratio, because it's going to have to be repaid if it's not forgiven, what is that going to look like? One thing I would recommend is going ahead and contacting your financial institution and at least have that conversation now, compared to the loans coming due, or the banker reaches out to you and says, I need to see your in-house financial statements. And then they see the in-house financial statements and go, we got a problem. Well, because you're on this Zoom call today, these people are not going to have problems, but you got to be proactive with your bankers, right? This goes back to anything in life. Being proactive with your CPA, your board, your accountant, the banker. You almost have to over communicate anything you're doing right now to just meet the bar. Does that make sense? I think we've talked about 15 minutes on PPP. I can't believe I talked that long on that. So we're going to move on to the next little topic that I have on my list, that what I am seeing out there in the marketplace right now. Believe it or not, on the national statistics, mergers, these are the topics right now that we're seeing across the nation from talking with other firms because of COVID. And I know everyone is tired of COVID. Lord knows I am. You are seeing a lot of different nonprofits that have similar missions starting to have conversations and actually start merging, bringing resources together. So those are things that we're seeing firm wide. So, be thinking that way if you see that your nonprofit is potentially not sustainable because of funding cuts, because whatever, you got to be thinking in those terms. And if you're a nonprofit out there and you're getting a lot of your funding from contributors, we're seeing a decline on that, because I hate to tell you, this even goes back to the conversation back in 06, 7, and 8, when the world blew up and we had the great recession, if you would. People drew back on contributing money. When people are scared, people hang on to their money. That's the bottom line. So I want you to be thinking about that as well. The other thing that we're seeing nationwide, and I got to tell you, we're seeing it a lot in our local community right now, is the retirement of executive directors. So if you think about the baby boomer generation, thinking about that age, and oh, by the way, I missed the baby boom generation by 4 years. I think 1964 was the cutoff. I'm 1968, so I'm Generation X. So I'm not even a baby boomer. I can't retire. But thinking about retirement of these EDs is going to have a huge negative impact to these local nonprofits. And let me tell you why. Because if you think about an executive director's job, if you would, not only are they running that organization, giving guidance to the board, getting feedback from the board, but your executive director is the boots on the ground person in the community. And they're the ones out there that have these relationship with these major donors. And just having seen this through the years, people love the organization, they love the nonprofit, but they sure love that executive director. And when that executive director leaves, unless that organization has done something, some transition plan, if you would, to have somebody coming along right beside that executive director that's about to retire, you're going to have a problem, because these people, unfortunately, are going to drop off. They just are. I've seen it too many times. And yes, I know they love your nonprofit, but you better do something now so that in a year from now you don't have a problem, or 3 years from now have a problem. And I'm sure what I'm saying you guys have thought about, but just be thinking about baby boomers retiring. What are we doing to keep our relationship with these donors? I do want to jump into what I'm calling my the survival of nonprofit to COVID-19. So I penned an article when all this came down, and it made it to Florida politics somehow, but I want to go through a few points in my article that I wrote. If you didn't have time to look at it, hopefully LaShawn will send this out when I'm done, and you can actually read the article word for word. I just want to hit a few highlights if I can. So these are unprecedented times. We all know this. You have got to do what you've never done before as a nonprofit employee, as a nonprofit ED, as a nonprofit board member. You got to take some risk. And I'm not sure exactly what these risks are, but hopefully you guys are now communicating, and communicating more frequently than you had in the past. Way before the COVID-19, most nonprofit boards met once a month. Well, I'm hoping right now, with everything going on, in my mind, still unstable market. I mean, I read the Wall Street Journal every day, right? So I just want to know what's going on in the world. And I read the Wall Street Journal today. Two of the largest mall owners in America have just filed for bankruptcy. 126 malls this one company owns. And all this is going to have a trickle down effect to affect your nonprofit. People are not traveling as much. People are not giving as much. And now we're on the precedence of today's the election day. And oh, by the way, do your job and vote. No matter how you vote your conscience. So we live in America. You need to take that right, because very few people have the right to vote, choose who they want to lead the country. I think today is a very important day, both on a federal basis and a local basis. So we got a lot going on today, and I know you'll do the right thing and do good and vote your conscience. So you got to take risks. You got to be doing what you've never done before. So I was getting back to, if boards were meeting monthly, I'm hoping the executive director is at least having some kind of weekly call, Zoom call, text, whatever, to their executive committees on their board. You got to be communicating. You got to stay on top of this stuff. And what I'm also seeing is organizations that have been hanging on by a thread for years and years and years. This whole COVID-19 thing is really gonna be detriment. I just issued a report last week on a nonprofit, not in Tallahassee, by the way, so nobody can think it's you or somebody else on the Zoom call. But I actually issued a going concern opinion on their financial statements. And I think that's going to be a trend that we're going to be seeing. So when your CPAs are out there doing the audit, they're looking about the survivability of your organization. We're looking at things like, have they been running losses year after year after year? That's one thing we look at. The other thing that we look at is liquidity. How much money do they really have? How much lines of credits do they have? And oh, by the way, if you don't have a line of credit, and you don't need a line of credit, today, my friend, is the day to go get a line of credit, because when you need one, you can't get it. So you need to get that line of credit when you don't need it. Trust me on that. And if you do get the line of credit, drive across the line into Georgia, pay no dock stamps on the deal. It'll save you a few bucks. Okay, you probably knew that. So if you have an unsecured line of credit, you can drive into Georgia, sign the document. There's no dock stamps on the deed. That's a beautiful thing, right? So lines of credit, lack of liquidity, lack of working capital. And when I say lack of working capital, one thing that we do is we look at your cash, we look at receivables, if you would, unconditional promises to get a number. And then we subtract from that your accounts payables, your principal payments on your mortgages coming due in the next 12 months, accrued leave, accrued vacation, those type of things. And if we take your current assets and subtract your current liabilities, and we have a negative number, this is a bad thing. This is not good. So we need to be looking at these things. You guys really that have been running on I'm going to call it a shoestring budget, if you would, very tight. You got to be looking ahead. You got to be doing cash flow projections. And I mean doing cash flow projections weekly. Because I have, even in this market right here, I have one client, if his draw or his state reimbursement doesn't come in the day it's supposed to, he cannot make payroll. He cannot do it. And his payroll runs about $500,000 every 2 weeks. That's pretty substantial. So the draw comes in, boom, and that payroll is going out either that day or the next day. So one hang up at the state level, we can't make payroll. And if we can't make payroll one time, what happens to all our employees? There's a mass exodus, right? Because people have to get paid. You got to see that. So we're talking about cash flow. The other thing to be thinking about, which kind of goes back to the PPP thing, you really have to over communicate with your banker. And I would even take it to the step of, and this is outside the box if you would, but if you do have a loan with the bank and they're requesting annual financial statements, I would almost be proactive, and I would send monthly financial statements to the banker and say, here's where we're at. Let them know where you're at, because if something bad happens, they're going to be more than likely to work with you if things go south than them get blindsided, if you would, at the year-end financial statement when you've lost $200,000 and they had no clue. It puts them in a bad position. It puts their bank in a bad position, and we don't want to do that. So if you communicate with that bank along the way, they're going to help you when times get really bad. The other thing I want to talk about too is something called a paradigm shift. Everybody's heard of that, right? So you got to do things you've never done before. You got to be willing to change. And what you have done for the last 30 years is probably not going to get you where you want to be in the next 10 years. And I'm being very serious with that. So I have a passion about nonprofits in our community because of the work you guys do for our community. And I want to see each and every one of you sustain yourself. So you have got to be nimble. You've got to be willing to change and do things you've never done before. Okay. So when you get time, LaShawn, if you can just send out that article to everyone, that would just be fantastic.
It's in the chat. We got you.
You got it. The other thing I wanted to talk about, and I can't believe I just spent another almost 15 minutes talking about that. The other thing I wanted to talk to you about right now is my favorite topic is fraud and how much there has been an uptick on fraud because of COVID. I was driving from Gainesville, Florida last week, and I have a client down in Lake City. They have a board member in Gainesville. So she asked me to call this person in Gainesville who was on the board in Lake City. So I called the gentleman. He's the treasurer. Hey, this is Mark Payne. How can I help you? He goes, we got a problem. Now, did you notice what I just said? We got a problem. I don't even know this guy, but yet I'm the CPA and I've already been drug into his problem. So yeah, we got a problem. So his problem was A bookkeeper with sticky fingers. This person probably has taken roughly $50,000 from the organization, and the organization is not that big. So the first thing I made a comment to him was, well, insurance wise, do you have a fidelity bond, an employee theft bond? Yes. How big is it? $50,000. I said, well, most of the time, the insurance company is going to want you to file charges against that individual before they will issue you retribution, if you would. So just be thinking about, if you're out there with somebody stealing money, are you willing to get them arrested? Because that's a big deal. The other thing that you got to be thinking about too is, do I want to see the name of my nonprofit in the Tallahassee Democrat? Because that's what's going to happen next. So and so gets embezzled for so and so, and I'm a major donor of this organization. How do you think it's going to make me feel? Am I going to want to give that organization more money, or am I going to want them to like cut them off until they can get their act together? I'm probably thinking most people are not going to be contributing if people are stealing money from your organization. So we don't want that to happen. I want you to think of a concept. And oh, by the way, there's an uptick in fraud. Are you ready for this percentage across the United States? 70% increase. 70% increase. That's crazy, isn't it? So we don't want that to happen to your organizations. So I do want to tell you a couple things to be thinking about to stop that or help prevent that from happening. Number one is there's three points to fraud, if you would. So if you're in an organization and you see these three things happening or are aware of them, you need to be just have your antennas up, okay? And those three things of fraud are as follows. Number one, pressure or motivation. So does this person have a gambling problem? Has this person just been through some major crisis so that their spouse lost a job? Are they going through a divorce? Are they driving some Ferrari in your parking lot making $50,000 a year? You got to be looking at those things. The other thing to be looking at would be rationalization. So I work for a nonprofit. I've been there for years and years. And oh, by the way, most of your fraud happens with people that have been there for many, many, many years. I deserve a raise. Amber, why didn't you give me a raise this year? I deserve a 2% raise and you gave me nothing. Well, I deserve more. I deserve better. My family deserves better. So what we're going to do is I'm going to give myself a raise. I'm just not going to tell you I did it. So we don't want that to happen, right? And the other part of so we got rationalization, pressure, and the one that you really can be involved with is something called opportunity, right? So everybody knows what Missouri does. Missouri is the what state? It's the show me state, right? So you got to show and prove everything. So if people have an opportunity to do something and no one is watching them and they have a lot of pressure in their lives, they potentially could do bad things. And these bad things that they do, they start out small. I'm just going to take $20. I'm going to put the $20 back my next paycheck. It's a loan, if you would. The 20 becomes 40, the 40 becomes 200, and the 200 becomes 20,000. And that's literally how it happens. Just start small, bigger, 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 bigger. I'm not caught until one day it blows up. And we've all known of situations whenever we've read the paper where we've seen these organizations that have had fraud. So the things to think about in your organizations to prevent this from happening are as follows. Are you ready? Number one, if you have just one person in your accounting department, we have a lack of segregations of duties. And there's nothing you can do to prevent it. But if you're on the board of directors, you want to be doing things like the bank statement getting mailed to the treasurer's house. It's so easy to do. You get the bank statement mailed to the treasurer's house, have it sent to the office. You got two statements, whoop-de-doo. That treasurer is opening up that bank statement and going through every check that's written, every check to see where it's going and asking questions. Most of your fraud that occurs, though, is not on the outflow, it's on the inflow. It's from diversion of funds, if you would. So if I ran an organization in Tallahassee, a nonprofit called ABC Nonprofit, the checks come in made out to ABC Nonprofit, and I'm thinking, man, I could use some extra money. So an easy way to do that would be to go in QuickBooks, because most of our small nonprofits use QuickBooks, and do one of two things: either delete the receivable that was recorded so it doesn't show up, and B, I take that check made out to ABC Nonprofit, I go to a different bank, or I even go to a different town, and I set up a corporate account in the name of what? ABC Nonprofit. I deposit that money into that checking account. And guess who's the check signer on that one account, Amber? It's me, Mark. And guess who all the checks are made out to that is coming out of that nonprofit? It's me again, Mark. So they're all coming to me. So they never even hit my books, the money. So it's easier to divert money going into the organization than it is on the outflow side. Does that make sense to everybody? Pretty much. So if you got an organization out there with one, two bookkeepers, a little dinky accounting department, that's where you have problems, is on segregation of duties. And I can go through multiple problems, if you would, on as far as internal controls are concerned. The other thing that I wanted to talk to you real briefly about is what kind of information you should be getting on a monthly basis, and how often should you be looking, and what should you be doing if you're in that organization. Are you ready? So at a minimum, if I'm in a nonprofit, if I'm on the board, if I'm the CFO, if I'm the ED, whatever, at a minimum, we want to be looking at the statement of financial position. That simply lists out all your assets, your liabilities, and equity of the organization. And I want this monthly, by the way. I also want the statement of activities, which basically shows all your revenues, all your expenses, and then your net income or net loss for the period. Very important. And if you're driven by grants, I'd actually want to see a grant report, budget to actual, to know how that grant's doing. The last thing you want to do is have $100,000 grant and then me spend $200,000 on that activity, only getting reimbursed for 100 grand. Now, yes, you've spent an extra 100 grand, and that's all fine, well and good, but this is a business and we have to stay in business. Did you know the only difference between a for-profit and a nonprofit, when it gets right down to it? Really, it's this. For-profit entities have shareholders, pay income tax. Nonprofits don't have shareholders and generally don't pay income tax. Other than that, both of these entities have to make money. You have to do it. So the statement of financial position, statement of activities, budget to actual by grant, budget to actual by the whole nonprofit as a whole. And I'd even take it a step further with what we have going on right now. I would want to see a detailed AR report. So I would want to know, if I'm on the board, who owes money and how old that money is. What's the aging of that? I'd also want to see an aging of accounts payables. I'd want to know, who do we owe money to? How old is this? And if we're not paying our bills, what's going on with that situation? Very important information to keep in the back of your mind. And with this COVID thing going on right now, I think weekly cash flow projections is imperative. It's got to be, unless you're sitting on millions and millions of dollars, which most of our clients are not. You got to be doing those weekly cash flow projections. If you're looking at a set of financial statements as well, and I'm talking to everybody here, and there's something on that financial statement that doesn't seem right, or you don't fully understand it, I'm empowering you right now on the Zoom call to ask that hard question. And if the response that you've been given to you does not answer that question, then I want you to ask that question again. And if the response still doesn't seem right, ask the question again. You keep asking that question until you have full resolution in your mind that their response is appropriate, because I can't tell you how many times I do board presentations and I'll be waiting around but to do my audit presentation when the board's going over their financial statements, and you can just see people's faces like wanting to ask the question but they don't. There are no silly questions. The only bad question is the question that did not get asked. So it's your responsibility in that organization to ask those hard questions. If you see things out there, and we even do this in our firm sometimes, we come up with little games to play for people, with COVID. What are some ways that we can be more efficient in our firm? What are some ways we can actually cut back on cost in our firm? And put that little challenge out to your constituents in your organization. Let them give you ideas, because if you and I amongst ourselves talk about an idea, it's a good idea. But if we share that idea to multiple people, that good idea can become a great idea. So put a little contest out there, throw some little bone, $50 Starbucks gift cards for who can come up with the best money saving idea for the nonprofit, because we're all in this together. At the end of the day, we want to see the survival of 100% of our local nonprofits. And that's kind of your job today. Now, I'm running about 9 minutes ahead of schedule. I'm going to open it up to LaShawn and Amber. If you guys want to ask questions on this call, you just ask away. And if you don't want to ask the call in a public forum, you can feel free to contact me on a private forum, and we can kind of go from there. So I'm going to turn it open and let you guys ask me anything you want to ask.
So just to let everybody know, we did put the articles from Mark in the chat. So you'd feel free to copy those from the chat. We do have a question in the chat, Mark, and that's can one still file for the PPP loan?
I believe that ship has sailed. That I don't think so. I could be off on that, but to my knowledge, I think that time is gone. I think the problem is they're out of money. That's the biggest thing, right? So they talked about a round two funding of another however many trillions of dollars. I think it got shot down in the Senate. But I don't think you can apply, but I don't think you're going to get any money. How about that?
So I'm going to come over here and ask my question. So we have a couple of smaller organizations that we represent on the call, and if they're not large enough at this point to have a bookkeeper, let's say, in place, are there any cash flow projection templates or templates in general, like you've mentioned, that can be accessible to them, or can you point them in the right direction?
I'm looking at Sheena smiling up there.
That's an interesting question, but let me just, to keep it simple, and this is so simple, you're going to laugh at me when I tell you. Think about your own paycheck, right? So I know I'm going to get paid this Friday. Yes. And I know my paycheck's going to be for $500. And I also know that I got a utility bill coming due. I got this bill coming due, and I got this bill coming due. 500 less these bills coming due, I can figure out if I got a problem or not. Looking ahead the next week, because everything that we do, Amber, is pretty repetitive year after year after year, month after. I mean, when your annual insurance bill is going to come in. You just know. These one-offs like your annual audit or whatever else you're having to do. So if everybody, I think the best budgeting technique in life and cash flow projection in life is to look at your trailing 12 months. If you look at those trailing 12 months and run reports, you're going to have a pretty good indication about what your cash flow is going to be. But if you were to pull up a template, it would be no more or no less than what I just told you. I mean, if you're not very good at Excel, you know what? It's okay to get a pencil and paper and write this stuff down, guys. Pencil and paper still work.
Thank you.
You're welcome.
So what other questions do we have?
I like the cat, Rhonda. Is there any show and tell? Rob, do you want to make a comment? I can't even see or hear you. You probably represent one of our bigger nonprofits in Tallahassee, I guess. I don't know.
I have a question.
Yeah.
Hi, everyone. I'm Shaquela, and I do represent a really small nonprofit. And I'm just looking at my notes as far as the detailed AR report and everything else that you listed. When it comes to, we're in transition with our bookkeeper, so I am maintaining all of this as the ED. And I just wanted some advice because this isn't something that I typically do all the time. But in doing that, I have like 2 books dedicated just to our finances, and I have it separated. And I'm using I think it's something treasury, nonprofit treasury, to insert our receipts right now. So for myself and anyone else in this situation, do you have any advice?
So do you have a board?
Mm-hmm.
So this is so basically, if I understand your question, you are the executive director, you are the bookkeeper, you're doing it all.
Mm-hmm.
I'm assuming, are you a check signer?
Yes.
You are, because you have no bookkeeper. They were in transition. I think what I would do at this point in the game is this is going to be a little aggravation, but segregation of duties are an aggravation until something goes wrong. Just to protect yourself, I would have a board member come in once a week and sign checks.
Okay.
I would strongly recommend that. I'd also strongly recommend having the bank statements go to that board person. I think the more people you really got to leverage off your board if you would. You got to get them involved.
Okay.
That would be my advice on that.
Thank you.
My pleasure. And also, there are no perfect internal controls. And even if your internal controls were perfect today, by tomorrow, they're outdated because things change that rapidly. So no matter how good your internal controls are, they can always be improved. They're always changing. Somebody's always going on vacation. Someone's always quitting. There are always changes. And you just got to be willing to change with that to have good internal controls.
So, Mark, we have another question. So, for some of your newer nonprofits, they're just kind of getting going, trying to get CARES funding, that sort of thing. How much? So, we had this conversation this morning with a nonprofit who was like, I just don't see it. How much of the operating expenses should they have in the bank to really be serving clients?
That's a fantastic question. In other words, what you're asking me is, if we had no money coming in the door, how long could we last? I think that's your question.
Yes. And if you're new, if you're saying you're serving clients, like, can you really serve clients if you don't have anything? How are you going to get there? If you can kind of speak to those couple of things.
So yeah, first of all, you got to figure out what is your burn rate? And burn rate basically is how much money are we going through weekly? And my weekly expenses are utilities, payroll, whatever, whatever. So what's my burn rate? And then I got to tell you, at a minimum right now, I'd want at least 3 months of cash reserves. 3 months. 6 months would be better, but I think 3 months is a good start. And if you got to think about your budget, if you had a budget of $120,000, right? 10 grand a month, I'd want $30,000 sitting in the bank. Just if no more money came in, I could function for another 3 months. And then during that time, figure some stuff out. I mean, 6 months is better, but that's a lot of money to be sitting in your checking account for, $60,000. So the bigger you get, the more that becomes an issue, but it's also a big issue when you're small because one hiccup and you're in trouble, right? So I'd say 3 months. Hopefully that answers your question.
Yeah, it does. So another question says, how can a new program survive without being able to get PPP or anything?
So The question is, if we don't have PPP money, how do we survive? Well, obviously this pandemic is the first time we've ever seen what we're seeing. And this goes back to the conversation. If you're a small nonprofit and things are really, really tight, you got to have those hard conversations with your board, because at the end of the day, we're out there trying to serve people. I'd be trying to figure out what other organization is out there that's doing similar work as to what I'm doing. And this goes back to that merger conversation, going to have conversations with another ED, with another board, to figure out what they're doing, so because they may be successful. Maybe they're struggling too, and the both of you together. I'd rather see one strong nonprofit than two failed nonprofits. So if you got other organizations that are doing similar type works, you got to be talking to them, that executive director. Here again, over communicating is just meeting the bar. So I think talking with people, getting ideas is imperative.
Thank you. Ramona, I see your hand. Did you have a question?
I did. Can everybody hear me?
Yeah.
Yes.
Okay. Hi, Mark. I had a question going back to recording PPP right now, and I've been going back and forth with it in my mind how to do it. So what I landed on was similar to what you said in terms of refundable advance. I have it as deferred revenue right now.
Right.
And as we draw it, the way that I'm logging it, I'm logging it by payroll. So then I move it onto the P&L as we draw it as a credit, as an offset against our salary. So should I be reclassing the deferred revenue to refundable advance, or is there?
Well, number one, do you get an audit?
We do.
You do. So your auditor is going to come in, and they're probably going to want you to keep all that money in refundable advances. What's your year end?
Calendar year.
So your December year end.
Mm-hmm.
You know, this goes back to the conversation where it's really not GAAP. We're kind of getting into the world of international standards on probability.
Right.
So there's not a right or wrong, but the conservative approach. And think about this: when you started your year, January, February, you had no idea that this whole pandemic was even going to happen. The PPP money was not even in your budget, right?
Correct.
Have you seen a reduction to revenues because of the pandemic? Question number one.
I think we're going to see it in our fundraising, because our major event that we have, Oktoberfest, we weren't able to do that in person. So we're going to see a reduction there, definitely. But other places, in terms of Meals on Wheels and things like that, we've been able to secure additional funding in those areas. So it might even itself out in the long run as an agency. But yeah, that's where we're at.
The conservative move would be to leave all that money on your books as a liability until you actually get forgiveness from SBA, and then putting it into revenue when that event happens.
Okay, so the entries I make to offset salary, should I not be doing that? Should I reverse those right now? Okay.
Correct.
Okay.
So you're going to leave the original entry to your books would be to increase cash and increase that liability, the refundable for the same number, and then leave it alone.
Okay. Okay. I will do that. Thank you.
So Mark, last question, and there are some individuals on the phone who are just kind of getting going with their nonprofit. So Amber and I'll definitely be talking to you about some individual support for them. But one of the other big conversations that came up last week in meeting Need a Need with a nonprofit was around the tax documents that need to be filed for their nonprofit. Can you hit on that a little bit?
So I guess the first thing, obviously, to start we're talking about starting a nonprofit, basically.
So starting a nonprofit, and if you're in that first year, at the end of the year, what do you need to do to be good with the IRS?
I got it. So depending upon your revenues, and you could actually Google it, and I think that number has changed, but there's basically 3 returns that can be filed for a nonprofit: a 990 postcard, right? Amber, do you do a postcard, Amber? I'm thinking you probably do. And I can't remember that cutoff. I want to say it's 100 to 150 or 50, somewhere in that name. You could Google it real quick, 990. Basically it's an electronic, hey, IRS, we're out here, we're still here. There's nothing really to file other than notification to the IRS with literally a postcard, if you would. The other form is the 990EZ. And depending upon your level of revenue, that mandates the postcard, it mandates the EZ, and then it mandates that full 990 form. The problem is if you're a nonprofit out there and for some reason you're actually getting funded through the United Way process, if you would, they're going to want to see a full 990, even if it's not required. So we've actually filed 990EZ for clients, and they go, hey, we need to see the schedule in the back breaking out the programmatic versus the administrative dollars. So that'd be the only reason you'd want to file that more complicated return. So that's one thing that has to be done. Obviously, you got payroll. Hopefully, if you're a smaller nonprofit, you're utilizing the services of a local payroll company. There's several in Tallahassee. They do a great job. It's pretty inexpensive. I have a lot of clients, and I have no ownership in this, not putting the plug in, but Payout USA does a great job with filing payroll returns. I think they charge like $7 per paycheck. So if you got like 2 employees, it's $14 a month. They file your 941s, your reemployment returns. They file everything for you. It's phenomenal. So outsourcing payroll is a pretty good thing to do. The other thing to do that a lot of people mess up on is filing with the Department of Agriculture so they can actually solicit for contributions. Amber, you're familiar with that, I know. The other thing that I see people mess up on is they'll get an email from the state of Florida on re-upping their annual report, if you would. There's a small fee for that, re-upping your organization for another year, making sure you do that, because if they dissolve you administratively for non-payment, the fine for that's like $400. It's pretty expensive. Otherwise, the annual fee's pretty minimal. The other things to be thinking about is public inspections. So if you were to look at a 990, I mean, technically somebody walks in your door, you have to give them your 990, right? So just be thinking about those public inspection rules. Also making sure that the board is at least receiving the 990 or the 990EZ prior to filing it. And if you're a small nonprofit, you basically have 5.5 months to get that thing filed. If you can't get it filed, you can do a 6-month extension. The bigger thing too that I'm seeing with smaller nonprofits is, as far as, I know you said tax filing, but, just keeping your books reconciled is huge. Closing your books out, backing your system up. Those are all critical things that need to be done. The other thing that seems to trip up people, if you're filing that 990, even if you don't have grants per se, is coming up with some allocation method to allocate those costs between programmatic and administrative costs. Because eventually, if you start getting grant funding, you got to have a cost allocation plan, and it gets more and more complicated. The more detailed you can be, the better. So we talked about payroll, we talked about unemployment, we talked about the federal return, Department of Ag. I think that's pretty much it, LaShawn.
Yeah, so we had a question about the Department of Ag, and so we just put in the chat, once you get your 501c3, then that's when you register with the Florida Department of Agriculture.
Right.
And if you don't, there's hefty fines and you need it to solicit contributions.
Amber's talking from experience. Go ahead.
So she just said if you don't, there's hefty fines if you're out soliciting donations. So for some of our newer members on the phone, some of you are still waiting on your 501c3 to come in. I know one person is up under umbrella 501c3, so they'll be switching to get their own 501c3. And then once you do that, then we'll begin that next step of working with you to register with the Department of Ag.
Okay, good deal. Any other questions, LaShawn?
So I think that's it. Like I said, a couple people are still waiting. We know the IRS is behind right now, and so
They
when
are
those finally
behind.
come in, we'll
They're very slow.
help you through. Yeah.
We got we have a lot of clients that filed their personal returns October 15th. They still have not gotten a refund. So it's just
Yeah.
everything's put on slow mode right now. Well, I appreciate what you guys
Well,
do.
we want to thank you all for your time. Go ahead, Mark.
I was just going to thank everyone for participating in today and what you do for our community. It's really appreciated.
So we want to thank Mark for his expertise. As you can tell, he's very passionate, very knowledgeable about this. Like I said, we do get the pleasure of sharing the office space with Mark, and he is hilarious. So if you have any questions or anything that come up for you, feel free to reach out to me and Amber. Mark is always willing to help, and he or someone from his team, will definitely walk you through anything they need to walk you through. This will be added to our YouTube channel as well as our Facebook page. If you want a copy of the PowerPoint presentation, just email me and I'll get that to you. So we hope everybody have a good day. As Mark said, if you didn't vote, please get out and do that. And we will talk to you all soon.
Great. Thank you so much, everybody. Have a great day.
Bye.
Bye-bye.